Hey everybody, welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist and Master Trader at InTheMoneyStocks.com and VerifiedInvesting.com. Holy cow, talk about a weekend where we had stuff going on. Crypto ripping to the upside. Well, that's not true. Crypto overall, not so much. Bitcoin, yes. Bitcoin breaking the key 38,000 level, pushing now north of 40,000. We're trading between 41 and 42,000. In fact, folks, let's get right into that chart today because, again, I always like to focus on what's moving the most. So what we can see very clearly here, and I'm going to flip over to a daily chart. Remember what we had here. We had very clearly a consolidation going on between the 38,000 level right here, right? Okay. And the bottom level here. Now, again, if you've been following these game plans, and I know, listen, a lot of people out there may not follow as closely as they should. That's their problem. But if you've been following, we've talked about how when you have a flat top with an upsloping channel trend line, price tends to eventually break out. That's just the probabilities. That's what the data shows. All right, what ends up happening here very clearly? We broke to the upside, and now we're trading at 41,700 and change. So the kicker is, okay, well, where are we going? Well, the first stop, and I talked about this in this game plan as well, I said 42 to 43,000. That was going to be your next stopping point. Now, if we zoom out on this, we can take a look at why that's the case. All right, so again, it might be a little bit hard to see in this situation, but there are some key pivot points right around that level. So there's some points right in here, that give us that 42 to 43,000 level. Now, the high of the day so far on Bitcoin is 42,163. I will go on record and say I did post or I did take another small short right up above 42,000 today. This is the method that I use. And listen, it's not to say that I'm not a long-term believer in Bitcoin. But again, if you look at the Bitcoin chart, you've literally seen no major pullback since we were at 26,000. Now, again, the beauty of what I do, and again, let's talk about percentages. My first little short, 2.5% of my portfolio. My second short, which I just took today, 2.5% of my portfolio for a total of 5%. Now, a lot of you guys will say like, oh man, that's nothing. That's the point. The point is when you're trying to find where these things top out, you have to be very aware that they can go up. And I have a max move on this that says there is a chance we could go as high as $48,000. Now, I'm going to show you why. So the potential max upside move would be around 48,000. The reason that's the case here, guys, is because you have a pivot high right here. Let me bring that up now. So right here, and we draw a line straight across. We then take some pivot points to the down or from the lower levels here as I zoom out a bit, and we go all the way back to the highs of 2019. Right there, through the lows of the bull market right there, and they converge right up here at 48,000. Now, as if that's not enough, check this out. What if we do a Fibonacci retrace from the bull market high to the bear market low? Let's do that right now. If we take that Fibonacci retrace, what do we get? We get a beautiful Fibonacci, and there it is on the chart. I'm going to zoom in a little bit so we can see it a little bit more closely. But take a look at this right here, the 618, which is a major Fibonacci number. That line literally aligns with 48,000 to a T. Now, one of my concerns here is that everyone I'm seeing, so initially this was my target. I talked about it 6 weeks ago, 2 months ago, as the potential max move upside on this chart. My only concern now about 48,000 is that everyone is gold. Take a look at gold here, guys. So we know gold was on the verge of a breakout. We had a high pivot here from 2020, high pivot 2022, 2023. Yesterday, when gold opened, it had this God candle, as the new term is, where it just shot ridiculously higher, getting basically above $2,150. Now, what ended up happening here? So basically, what happens is, and when you get these big pops, what's essentially going on is that there are a lot of short stops on gold. Now, I've always been saying, guys, gold is awesome. Gold is going to be a top performer. But what happens is when you go through that all-time high, there's a certain amount of stops for shorts that are triggered. Now, this pop in gold occurred basically last night when the S&P futures opened, when the gold futures opened. In other words, the volume was almost non-existent, right? So when there's no volume and you have a bunch of shorts that are triggered, it's going to cause a massive oversized move. That is not a normal move for gold, guys. Now, the kicker is this, is that number one, we had an inverse head and shoulders here that I've talked about quite a bit. We were above it, but to trigger the inverse head and shoulders, you must, and I repeat must, get a daily close above the neckline. What's the neckline here, folks? This white line. Well, right now, we are not above the white trend line. Therefore, you have not triggered the head and shoulders just yet. We have to watch and see where this ends today. If it ends below, there's no trigger. Not only that, but one of the very things we have to be aware of, and I'm just a technician here, I am someone who dissects the data, but if we end where we currently are, what candle formation is this, guys? What candle formation is this on the chart? And this would be a topping tail. And a topping tail is a reversal signal. Now, by the way, does this mean that, oh, gold is going to collapse back down and no longer break out? No, it doesn't mean that. What it means is you actually could be setting up for at least some sort of pullback off of this level. Like, for instance, we know we've had a pretty remarkable bull run on gold, right? I mean, all the way up there. So to be honest, if it were to pull back here around 2,000, that would be very normal. There's also upsloping trend lines that can be connected right in that vicinity. So I would not be surprised if gold has a pullback to about the $2,000 level at this stage over the next, let's say, week or two. That could also coincide with the dollar gaining strength, maybe yields starting to bounce up. Now, in regards to yields, let's talk a little bit about Friday. The markets had a good rally, but Jerome Powell was actually pretty hawkish. I think the rally on Friday, and this is very common, if you look at the data, again, everything's about data, you have to understand that the data dictates that you see the first of the month, which was on Friday, new money flow coming into the markets. And so even with the hawkish kind of statements from Jerome Powell, the market basically pushed those aside and rallied up as new money flow came into the market. Now, interestingly enough, and we'll talk a little bit about this when we go to the S&P chart, we are seeing a pullback today. Now, remember what I said on Friday, and we're going to go to the S&P in just a minute, is that yesterday, or I should say Friday, the bulls maintained control. All right, remember, we had that reversal candle a couple days prior. We didn't get follow through, and the markets then ultimately pushed up. The bulls are still in control. But when we're extended like this with key stocks starting to roll over, I'm continually watching for where the bears begin to gravitate and take control again. And I'm watching like a hawk for this. Okay. Couple other charts here before we flip over. Natural gas continues to go lower. So again, natural gas, this has been a stumper for me personally because I was convinced we would at least see some sort of bounce off of this area. All we got was a two tiny green candle here, and then it broke lower. Now the positive is this on natural gas, and I'm going to tell you this is why I'm adding today to my natural gas position. The reason I'm adding is number one, we now are hitting and piercing the 200 moving average. Might be hard to see, but there's a blue line down here with the 200 moving average. And number two, this is probably the bigger one, and I'm going to take the 200 moving average off. But the bigger factor now is that if you do a Fibonacci retrace from the lows to the highs, look at what natural gas is hitting. Natural gas, and I can zoom in a little bit more on this chart, all right, natural gas is now hitting exactly today the Fibonacci 618 level. Now, again, that's my favorite fib retrace. I love the 618. I find it to be the most powerful of all the retraces on a Fibonacci basis. So we're now into the daily 200 on natural gas, and we're into the Fibonacci retrace. Now, by the way, this is a great example where I can learn to teach, where I could teach you guys about how my mentality works. What I do when I started a position on natural gas up here, I only started a tiny position. With members at Verified Investing Alerts, what was it? 1% of portfolio. That's it. Why? You might say, well, why? You thought you'd get a bounce here. Why would you just do 1%? Because at this stage of me trading, I understand that I'm going to be wrong a fair amount of times. Markets don't have to stop where I think they're going to stop. It's technical resistance or support, but it's all probability based. So if you have a 70% chance of a bounce here, guess what? There's still 30% chance it goes lower. So if it goes lower, you have to leave yourself opportunity to dollar cost average. Eventually, you're going to get a bounce, right? I mean, it's a commodity. You're going to get a bounce, but you don't know if it's here or if it's here or if it's at the 618 here. One of these levels will give you a bounce. Therefore, you dollar cost average in at the technical levels, building your core position so that when you get the bounce, boom, you're basically very little out of the money. You go right into the money and make money that way. All right, very cool as well, guys. Again, I love this kind of educational stuff because I think what it shows you too, folks, is that because everything I do is probability based, there's going to be plenty of trades that, at least probably 3 out of every 10 trades that we talk about that will not play out the way I think they're going to play out. The question is, how do you maneuver so that you can still ultimately break even or make money on them? And that's the key. Okay, so that was the key one as well. But by the way, I just want to mention one more thing. We just took profits in Verified Investing Crypto on this play right here. Look at this drop, guys, on INJ. We went short on INJ on the 30th of November. And again here, this is a crypto. And I just wanted to point it out because, again, it just shows you that you don't have to be a bull or a bear. Like that's for the plebes, the kind of the just the general people to be like, oh, I'm just bullish this or I'm just bearish this. I love living in between the lines, right? And ultimately we shorted this in Verified Investing Crypto up in this range up here. And look at the drop that it's seen. And this is just the beauty of it, is just looking for good charts, knowing that it's a probability basis, and just continuing to nail 7, 8 out of every 10 trades, and then using the other ones to dollar cost average accordingly. All right, real quick on oil, guys. Oil is retesting some support levels right here. I just want to point this out because I do think oil is going to break down. The head and shoulders is still fully intact. And look at where we are on the chart, right? So we have a retrace back down. This is following OPEC Plus meeting last week. We're now retesting this line. You may get a small bounce here, but not tradable for me. And ultimately, where is this going? We talked about it already, guys. This is going to the $68 level. That is a completion of the head and shoulders. And again, it would be right in this vicinity, also around these lows right here. So there's your commodity update on that front. All right, now let's walk over here. This is where we're going to go and we're going to take a look at some very interesting charts here. So, number one, remember the price action here on the S&P. This is the SPY tracking ETF for the S&P. I like to use this one for charting versus the S&P. All right, so remember right here when we had that reversal day, if we zoom in, this reversal day right here was important. We opened above those previous trend lines. I've erased them now because they're inconsequential. And we fell down and we closed negative. The next day, we were looking for a confirming move. That would have told me the bears have control now. If we didn't get a confirming move, it means the bulls gained control. What did we do on Thursday? The markets initially sold and then rallied back up. That means the bulls re-got control from the bears. What happened on Friday? We had a rally. I mean, right there, right? The bears lost control. The bulls took it over. Friday, we had a rally. There you go. The positive here is that you now have another hit of a trend line. And this is, again, this is what a technician does. You say, okay, We didn't stop at that level. The bears didn't get control. So now you go up a little bit more. Okay, now we've gone up a little bit more. We are now hitting our next level. Now we still know the bulls are in control, but we start looking to see, do the bears make another attempt? It's a dance. It's a constant dance back and forth about who's in control of this market. If we look at this chart, we can clearly see this was a double top. Friday tagged a double top on the S&P chart. So again, this is going back to your July high. We had the big corrective move, then this huge move up, and we finally tagged double top. Now, interestingly enough, today, and again, this is very early, markets have not even opened on the S&P, but if we go to the 10-minute chart, look at this sell-off taking place, guys. This is a nasty sell-off on the markets. All right, so we're starting to see some pretty significant down move, almost as if the markets are now reevaluating what Jerome Powell said on Friday in terms of being hawkish, right? So Friday he was hawkish and the market still rallied. Again, I think that was because of new money flow. It was a Friday, it was a Friday, the first of the month, new money flow from 401ks going in the market, jubilant investors. It kind of canceled it out. Now you look at this, we're actually, interestingly enough, look at this, guys. We are now getting down to negating the entire move from Friday. If we close here, if we close negating that entire move, you know what's going to happen? That's now a reversal candle. And what that means is, it means as a technician, we now say, okay, we now have a reversal candle. Whether it's engulfing, it won't be engulfing, but a reversal candle is a bearish reversal signal. We now look to see, do we confirm tomorrow? And again, by the way, just to be clear, I have no idea where the markets close at 4 o'clock. You obviously can tune into Trading the Close. That will give you your insights. Again, 3:55 p.m., 5 minutes before the close. Make sure you tune in right here on my channel on Verified Investing to get the latest on that data. But again, could we now have another bearish signal coming out of the woodwork? Something to keep in mind. Just flipping back here, look at the dollar. This is the U.S. dollar chart. Friday, the dollar kind of was a little weaker. Today, the dollar is very strong, and it looks to me like we could be headed back to this area, which is going to be resistance. I personally think that the fact that in basically 1 month, the 10-year yield dropped 80 basis points. That's a huge move for the the bond market. Absolutely huge move. That is something that investors have to pay attention to. In fact, it's almost like an overshoot. So I think we overshot above 5%. Now we're undershooting this way. You know where we're probably going to meet? Here's the overshoot, here's the undershoot. Where are we going to meet? Somewhere in the middle. That's the way markets work. In fact, I wanted to bring a elastic band today to kind of show you guys. But essentially, markets work like this. They go up here, and then they snap back, and then they go lower, and then they snap back. And there's some medium level in the middle that is actually the correct spot for the markets. The markets are trying to find that out using greed and fear, right? They got to figure out where that middle ground is for the markets to kind of hold steady. Couple things. Take a look at Coinbase, guys. Coinbase, last I checked, was up significantly here. Again, if we go to the pre-market data, you can see it's starting to roll over. But look at the high today. The high was around 149. If we go to this chart, you want to know this, and this isn't going to be popular for all you crypto people, but if we go to the daily chart, where are you going to have resistance? Look at this, guys. Look at all these lows right here, right here. See that? That's all in this range. All right, and again, my line's not the greatest, but basically right around this level, that's going to be your big resistance level. And then secondarily, this is the one I would look for today. This is right above 150, right below where we currently are. That one right there, all these pivot lows, that's going to be resistance. So for me, I'm going to actually look to short some Coinbase today if we get to about 152 to 153. All right, man. Whew. This is a wild market. Usually Mondays, and I'm going to flip it back to center screen here. Usually Mondays are not this active, but man, oh man, things are going nuts right now. And it makes it, honestly, it makes it fun for me. This is where charting is just so much fun. And again, where I can teach so many different things to you guys, those of you willing to listen, those of you willing to learn, and that's why I'm doing this. I'm not doing this for the pikers out there. I'm not doing this for the haters. This is for you guys who tune in every day religiously and use these to your advantage. That's my goal here and my passion. So thank you as always for the kind words. Thank you guys. I love when some of you guys back up some of the idiots out there on YouTube and some of these that on Twitter that are making asinine comments that don't understand. You guys rock, and I do see you, and I appreciate that. So thank you so much. Tell your family, tell your friends. Let me make a difference in their lives as well. Thank you again, guys. Take care.